The bear market shows no sign of letting up. Stocks veered sharply lower in September, adding to 2022's already considerable losses for the major market indexes. The Federal Reserve powered ahead with another 75 basis point rate hike, further hitting market sentiment. Despite weakness in the housing market and financial assets, the Fed continues to prioritize fighting inflation rather than worrying about downside risk in the economy. This has created a bleak outlook for financial assets, and there are few signs of any imminent catalyst for a turnaround. Even so, shrewd investors can take advantage of the huge discount sale in the stock market this autumn. These 5 stocks to buy for October are all trading near 52-week lows and priced for a major upturn as soon as market sentiment improves. Stanley Black & Decker. Stanley Black & Decker is a leading provider of power tools, storage, lawn and garden, and industrial equipment. The company enjoyed a tremendous burst of profitability in 2020 and 2021 as people bought new equipment to improve their homes and gardens. With folks stuck at home, it was a golden age for the industry. Since then, however, the tide has turned. Inflation and supply chain issues have further deepened the current profitability issues. However, the market has dramatically overreacted. Nike. Global footwear and athletic apparel titan Nike is having a rough year. The stock is now down more than 50% from its highs in late 2021. The company is facing the same pressures that have affected so many consumer companies lately. Inflation and supply chain problems have hit apparel makers hard. Nike's reliance on the formerly fast-growing Chinese market has also been a problem recently, as that economy has been slower to reopen following the pandemic. The quarterly results actually beat expectations on both the top and bottom line, but the results weren't good enough to reverse the negative sentiment as inventory growth worried Wall Street. That said, investors can take advantage of the current extreme pessimism and buy this global consumer giant at a sharply discounted valuation. BlackRock. BlackRock is one of the world's largest investment managers. It offers services to a wide array of clients, including institutions, individual investors, pension funds, endowments, and others. The company has had tremendous success with passive investments in particular, headlined by its iShares exchange-traded funds. In recent years, passive investing has taken more and more share from active mutual funds, leading to a boom for BlackRock. American Tower Corporation. American Tower is one of the 3 primary real estate investment trusts, focused on cell phone towers and digital connectivity assets. American Tower has long been the leader in traditional cell phone towers, which are invaluable to mobile carriers. While the tower market is largely tapped in the United States, American Tower has invested heavily in overseas markets in recent years to keep its growth momentum going. More recently, American Tower has made a major push into data centers, which diversifies and broadens its business. Citigroup. Citigroup is one of America's largest banks, with sizable operations in investment banking, consumer finance, and a large international division. The company is a deep value stock, with shares currently trading for less than 6 times earnings. Shares also offer a 4.6% dividend yield. Selling for less than half of book value, Citigroup is now trading as though it were distressed, even though its underlying operations have been performing well over the past year.